preparing this presentation, one of the things that's really important with trading is preparation. And that means taking the time to go over your trading plan, to go over your strategy, to write things down, and to be prepared every single day for the market. Because why? Because the market's going to throw things at you that you have no idea what's coming. You're going to go in there and you're going to try to trade the best that you can, but you don't know what's going to happen. And the reason I'm talking about preparation is because I believe that that's been one of the reasons. There's a whole group of reasons, but that's been one of the reasons why I have been successful, is because of taking the time to prepare. And I'm just going to share a personal story, because the market will throw things at you, but you know what else will throw things at you? Life will throw things at you. And if you're not preparing and you're not ready for anything, whatever life throws at you, you're not going to be able to overcome and have success. And taking the time to prepare for those things helps. So let me just give you an example, a personal example. I'm just kind of throwing this out there because I wasn't even going to talk about this today, but this is just extra bonus points. This week I moved to a new location. I have 8 kids, and I love having a big family with a lot of children, and it's a true blessing. But we were running out of room, and so we had to move, because we were like on top of each other. It was getting pretty crazy. 10 in the house was just a little smaller. And no, I don't have a TV, Richard. Um, but anyway, so we moved this week, and we moved into an old farmhouse out in the country, and it's an 8-bedroom house, and it's really old. And this morning I get up, and there was no heat, and so it's like 40 degrees in the house, and I work in an office, so yes, I have time. So it's 40 degrees in the house, and my wife is waking me up, and she's like, "It's freezing. What's going on?" And so I'm running in through the basement and trying to figure out what's going on. It's an old oil furnace, and my wife is yelling at me, and I'm like, "Do you think you can do this better than me?" And we were just going back and forth, and it was like totally stressful. I had to take the kids to another house where it was warmer, to a friend of ours, and then I went back and forth like 4 times, went and got some plastic or some electric heaters. We live in Pennsylvania. And so listen, I'm not distracting from my presentation here. I'm just saying, yesterday after work, I took 2 hours. I took 2 hours to prepare for my presentation. And because of that, today I'm prepared. I come to work. I flew here to my office today, and I am so confident that I've got a good presentation because I took the time to do the preparation. Now, if I would have just gone home yesterday, not done my preparation, I still could have put together some lame or just flown through it. It might not have been lame because I've done this so much I could just fly through it without even thinking, you know what I mean? But I still like to come and give you guys the very best. And life threw something at me. And I want you guys to realize that life is going to throw things at you, and the markets are going to go throw things at you. So take time to do your preparation every day before you do your trading. Okay, so now I'm going to go ahead and talk about my presentation. I just thought I would throw that in because that was like an extra bonus, I think. So let's go ahead and now talk about the markets. How to avoid the market's favorite trick. I'm going to show you what we do to increase our profits and talk about some of our entry methods during this presentation. And we're going to talk about how the market likes to stop people out. That's the market's favorite trick, head fakes. And we're going to go ahead and dive right in and share every single thing about this. Okay, so today I'm going to teach you the strategy we use to hit large profit targets and without risking any more on the trade. So this is a strategy we've been perfecting for quite some time, and I believe that it's simply the best way to make money in any kind of market. Now, increasing your risk is a bad thing, but increasing your profit is a good thing. And so we want to increase our target while leaving our risk the same or decreasing our risk. And so I'm going to go ahead and show you exactly how we do that. And if you can follow through and look at your own trading, then you will be able to see profit improvement. Now, I just want to share with you that I'm a Forex trader. I know that there's a lot of people doing a lot of different things in this webinar, different facets, which is a great thing. You know, there are people doing stocks, options, futures, everything else, and this stuff will work in that. But I specifically trade in Forex. I just wanted to let you guys know that. Okay, so here's an example of a winning trade, of a great winning trade. We took a short on this trade here, and there was a breakout, and we got 7%. Now, 7% is a great trade, and especially when you're looking at, we're risking either 1 or 2% on a trade. I don't recommend risking any more than 1 or 2%. So, you know, if you can risk 1 or 2% and get 7%, that's great. If it's on a 1%, that's a 7-to-1 risk to reward ratio, or reward to risk ratio, which is excellent. If you can do that, you're going to be making a lot of money. Even if you're risking 2%, it's still a very good ratio. When I say percent of what account size, it doesn't really matter. Whether you're trading a $1,000 account or a $10,000 account or $10 million account, the percent is this percent. It doesn't matter. Okay. So I'm going to teach you how we take these setups and why we make more money with the same amount of pips and risk as other traders. So if you watch the entire presentation, which I have about 40 minutes, we're going to show you why you can make a lot more money and making your wins much bigger without increasing your risk at all. Okay, and I also want to just go into, as a disclaimer, that, you know, just watching this one presentation is not going to help, or it's going to help, but it's not going to teach you how to find these setups or trade. You know, the speaker before me said it takes 10,000 hours, and I totally agree. That's it takes a lot of time. So I'm going to show you what I do, but then it's going to be up to you to try to find how to do that in your own strategy, how to implement some profit increasing things, because there just isn't enough time in a 50-minute presentation to teach you every single thing that you need. And I think you guys understand that. That's why you're attending these trainings on a Saturday, because you're trying to improve yourself. I do the same thing. I read a lot of books too, and it sounds like the speaker before me did too. Okay, so you need a great way to enter the market and implement this management strategy. So here's an example of our strategy. Okay, this is just so easy, right? You got a downtrend, and actually I take it back. It's not easy. It's simple, but it's not easy. There's a difference. Simple means that it's easy to understand, but it's not easy because it's difficult to execute and have the discipline to execute it. Okay, it's simple to understand, meaning the market is moving down. We find a pullback into the resistance, and then we go short in the direction of the trend. Very simple, okay? I believe in keeping it simple, but it's easy to execute day in and day out with what life throws at you? No, because the market is very difficult, just like life. If it's very difficult, you got to be prepared. Okay. So we're going down. We've got a pin bar here and then a continuation. Great setup. That's the type of setups we like to look for. In addition, with breakouts, another way we would trade this would be looking for this bottom here. You could see this bottom, and we'd be looking for the price to break out of that bottom. Okay. So we like to see a small pullback before entering on a trend continuation trail. This is a different example, same type of thing. I found it's the simplest and easiest way to trade. And Richard, it doesn't really matter what time frame that is. That's why I didn't include it, because you can find these on any time frame. I do like to look on the daily time frames to identify the trend and then break down into smaller time frames later on, and I will explain that later on. Yeah, Valerie, that's right. Life is unfair, and so is the market. But you know what I always like to say is I get it a lot better than I deserve, and I'm thankful for the blessings in my life. That's for sure, because you know, with the stupid stuff that I've done in my life, I don't even know why I'm here sometimes. But anyways, I'm just thankful every day. Okay, so I'm showing you winning trades as the examples, but these setups do lose as well. And I just also got to say, I'm trying to do this presentation and read the comments at the same time, and it's kind of fun. But if it's bothering you guys that I am in the middle of a presentation, then I stop to answer a question, let me know, and I'll just go straight to the presentation. Because I know you guys want me to go in a flow and not stop my training. So these setups do sometimes lose also, because here's a losing one, because you would have taken this pin bar and it would have come back up here and taken your stop out, because we always put the stop right above the top of the pin bar. Okay, so the most important thing to understand about trading is this, that no entry strategy is enough, and just entering the market at the right place is not enough to make you money. That's why no signal service is going to make you rich, because you need more than just an entry. As a matter of fact, you guys have to be able to have the mindset of a trader. You're not going to, you could get signals, but if you don't have the mindset of the trader, if you're not prepared mentally to trade, you're never going to make it. And I'm not trying to put you down. I'm not trying to put any down. I'm just telling you the truth, that you've got to go in to trading with an open mindset that it's going to take you time to learn, and it's going to take you work and discipline. And I know people don't like to hear that, but I'm just telling you from what I've experienced and from all the other traders that I've talked to, and also from all the people that we've trained over the years, that we have experienced these same things, that it's not just getting a quick signal on your cell phone is going to do it. You've got to put the time in. You've got to do the training. Uh, and so the main part of our strategy is actually how we get into the market. But it doesn't end in there. It's how we manage the trade, how we leverage our risk to juice out as much profit as possible. So, when you're trading, you have to understand that there's many different components. Okay, so I talked about the main part of our strategy is how we enter. Okay, but that's not everything. So you have to understand how to do entries. You have to understand how to do risk management. You have to understand how in Forex there's leverage. You got to understand how to leverage your profit. You've got to understand how to exit trades. You've got to have the correct trading mindset. I mean, there's an entire the psychology, the discipline, all of these things that you're doing to become a better trader and to become a better person. Honestly, you have to have all of those things. If one component is missing, it's not going to work for you. Okay, you have to be able to work a little bit on all of those things to make yourself a better trader. And I don't do this in trading only. I do this in every area of my life. As a matter of fact, on my cell phone, I have a little notepad that I call a fix myself list. I write down on this piece of, oh, that's not paper, on this, it looks like paper, it's a cell phone, but it's a notepad. I write down on this paper what I want to improve about myself in my own life. Certain things, like one of the things I'm working on right now is procrastination. I talked about being prepared and all that, but you know what? To do all of the things that I want to do in my life, to run my business and to manage my family and to do my trading and to have a personal life and to do every single thing, I cannot be procrastinating. So right there on the top of my list is to not procrastinate. And I'm working on that, improving that in my own life. And I have an entire list of things in my own life that I'm working on to fix. Well, guess what? I do have the same thing in trading. Things that I'm working on to fix in my trading. I'm just writing those things down, and I'm working on improving those. Because if there's one area that's out of whack, that's out of balance, it's going to throw the rest off. So if you're not able to manage your entries, that's going to affect your entire trading. If you can't handle your trading psychology, that's going to impact all of your trading. So that's why trading is so difficult, because we have to be well-rounded in several different areas. So, let's go ahead and show you exactly how. I know a lot of you guys want to hear the strategy, and I'm going to get to that. Just hang in there. This other stuff is actually just as important as the strategy. So what I'm talking about right now is how we increase our gains, and the main technique is by improving our stop losses, by making our stop losses tighter. Okay, now let's take a look at this picture right here. You can see that it says 107 pips and it's bad, and 28 pips is good. Now, technically, this is a perfect area to put a stop loss on a chart. And so when we say bad, technically it's the right way to do it. But the reason I'm saying bad here is not because of the technicality or the technical trading aspect, but because of the risk aspect. Because in trading, and I'm going to explain this in a couple other slides, you're going to make a lot more money if you have a tighter stop loss. And the reason being, to explain it very clearly, the reason that you'll do that you'll make money with a tighter stop loss, is because of your risk. Because if you're managing your account via risk, 107 pips of risk is a smaller trade size than 28 pips of risk. So if you're trading, let's say a $10,000 account, I'm just throwing out numbers here, 107 pips might be one mini lot, okay? But 28 pips would be 5 mini lots, okay? And they're still risking the same 1%, which is $100, okay? It's still risking $100, but the size is bigger. So if then you go ahead and go forward to hit your 100-point target, you will make much, much more money, okay? And so, I was watching the presentation before this, and the speaker said that increasing your stop loss or decreasing your stop loss actually makes your winning percentage go down, which is true, it does. However, if you're exponentially increasing your profit, then even if you have a lower winning percentage, you're still going to make more money. And I'm going to go ahead and show that in some of these slides here. Okay. So why do we want this type stop loss? So I already explained it, but now I'm going to go through the slides. It's simple. This is a completely different point here as well. The number of pips that you use as your stop loss is the number that the trade will need to go in the positive direction to equal your amount of risk. In other words, if you risk 1% with a 100 pip stop loss, each 100 pips that the trade goes in your favor is equal to a 1% gain of your account. Okay, so if you have a 25 pip stop loss, or if you have a 100 pip stop loss, you only need to gain 25 pips to hit your 1%. Okay, you follow me? But if you've got 100 pips, you've got to go an entire 100 pips. But you're probably thinking, but now am I going to be losing more trades with a tighter stop loss? Well, we already talked about that. But what if I told you that you can win more with a tighter stop loss? I would say more or the same or in the general area. You can do that. But it really depends on timing, market timing, and discipline and patience and waiting for the trade to come to you. Just like the speaker said before for Master the Gap, he said, you know what, he only takes 2 or 3 trades a week, and that's the type of patience that you've got to have. You've got to know what your setup is and wait for that thing and be patient, know where your target is, and if it's not there, you don't take the trade. That's how you can keep your stop loss tight and manage your same winning percentage, by being patient and waiting for the right setup to come to you. Now, you know what? That's not easy. You know what I said? It was simple but not easy. Sitting in front of your computer during a trading session for an entire day when you want to make money and not pull the trigger, that's hard, guys. I challenge you to do it. I challenge you to just sit back and watch the trades develop and not trade for an entire session. Just hang in there. Be patient. When you do that, you're going to find your winning percentage is going to go up and your profits are going to go up. I think one of the biggest problems is people are over trading. I mean, everybody's different, of course. I mean, I know some guys are trading all day long and they're great, but for me, I got to take the winning percentage. I got to hit the high quality setups. I got to be patient and wait for my trades. And you know what? I have not always been able to do that. It's like that whole fix me list that I talked about earlier for those of you that have been here the whole time. I have that list, and that was one of the things on the fix me list, right? Wait for the setup to come to me. Okay, so because we make more money with the tight stop losses, we want our stop losses to be as tight as possible without killing our chance of winning the trade so that we can make as much of a percent gain on the account. Okay, so we want our stop losses to really move up. And you know, here you can see this tail was in place at its 107 pips. This is 28 pips. Now the key to this is if this is a reversal trade and the market's crashing down, and then now we get some reversal candle and we're getting some upward momentum, and the trade continues on in this direction, the key is to wait until the price has that upward momentum and then put your stop here. Because once it hits this reversal, it's going to keep going, and it might whip back down again to try to whip you out, but more than likely, once it breaks this top, it's gone. But the key is to wait for this to develop and be right in front of your charts and go down into a shorter time frame. And I'm going to show you how to do that. So in this example, assuming we risk 1% on the trade, we need either 107 pips to make a 1% gain or 28 pips to make a 1% gain. So which would you rather do? Would you rather go 107 or 28? And I'll tell you what, you're going to hit your 28 pips a lot faster than you are your 107. Now, with the Forex market, it can move really fast in that amount of time. I mean, you can hit 107 pips in an hour. Yeah, but in 28 pips, you can get that in 15 minutes. Okay, I'd rather get my 1% for 15 minutes than wait all that other time. You know what I'm saying? I'd rather do that. And not only that, what happens when it goes farther? What happens when it goes farther? Then you can really go and really get an even bigger gain. By the time you get 107 pips, how much money have you made? Okay, now obviously you can't tighten all of your stops and expect to make tons of money. The market doesn't work like that. You have to get into high probability setups, and you have to have patience. You have to perfect your timing with these types of entries. I already mentioned that, but I just want to say it again because now it's on the stop. It's on the slide. It's important. I have said this stuff because it's important. Write it down in your notes. Remember, if you find yourself, and I'm sure I'm not talking to everyone, but if you find yourself stopping out a lot and not waiting for your setups, it could be because you're not using the right patience, okay? And if that's not you, fine, but if it is, take advantage of this. Okay, so once you begin to perfect the execution, you will begin to hit some of these bigger winning trades. You will also lose trades, but the important thing is not a winning percentage, it's about net profit. However, if you do it right, you will win a lot also. There will be a lot less trades because of being patient, waiting for the right setup. It's just we were talking about. You've got to be patient, but you're not going to be trading nearly as much, and you have to be there at the right time. Once you begin to achieve net profit, your investment can grow tremendously. Take a look. This is an example of 7% a month. Okay, now that's really doable, guys. This is doable. Why? Because if you're going for a 3% win or a 4% win on a trade, you only have to win 2 or 3 trades a month to hit this level. This is something that you in this audience can achieve, and it's only 7%. Okay, 3 trades a month, being patient. So guess what? You're like, oh man, I didn't trade today. But you know what? You saved yourself from taking a loser by being patient. And because of that, now you're going to have a profitable month because you only needed to take 3 or 4 trades in a month to get 7%. Well, you know what? 7%, people don't understand. 7% is a lot of money. Why? Because if you have $10,000 and you make 7% every month, in 6 years, you will have over $1 million. That's not a long time to generate an incredible amount of wealth. 6 years. If I was to run into you, a complete stranger on the street, I don't know what your financial picture is, but whatever it is, if I told you, whether you're rich or poor or whatever you are, I'm sure you probably answer this question the same way. If I told you in 6 years you could make $1 million, would you say yes or no? What would you do? You would say, wait, no, that's too slow. I don't know. You tell me. 6 years, okay? It's not a long time, and that's only taking 3 or 4 trades a month. Okay, so back to the strategy. Let me give an idea of how powerful this idea of using tighter stops to leverage your risk can be. Do you remember our daily tail bar, which is the 107.28 stop loss? I showed you that this 28 pip stop is going to get you a 1% profit much more quickly than the wide stop already. But let me explain what makes this powerful, and this is very important. This is where the numbers come into play, and I know a lot of you guys love these number stuff, the compounding numbers. This is pretty powerful here, so pay attention to this. Okay, so let's say you take 10 trades, right? 10 trades in a month. That's like, there's 4 weeks in a month. That's like 2 or 3 trades a week. Okay, that's not a lot of trades. You do it in 2 different accounts. One account you use a safe stop. The other you use our more aggressive stop. Okay, here are the assumptions. Average safe stop is 100 pips, and the average aggressive stop is 25 pips. The average target is 100 pips on each position. Okay, you're risking 1% per trade. Okay, take a minute to think about that. Okay, you got 2 accounts. One you're risking 25 pips. One you're risking 100. And now, if you're not used to forex, different markets have different systems. In stocks it's cents, and some in the futures it's ticks, in forex it's pips, whatever it is. But for this example I'm using pips because I'm a forex trader. Okay, so 25 to 100 with an average risk of 1%, which on a $10,000 account is $100. Okay, so 10 trades with the safe stop. So either one, you're still going to risk $100. 6 wins and 4 losses with the safe stop. You're doing a 1-to-1 reward to risk ratio. 6 wins is 60%. 4 losses is 4% at a net profit of 2%. Okay, that's 2%, which is still very good, guys. 2% a month, compound that over an entire year, is a very good monthly amount. People look at 2% and think that's terrible. But if you can do that over a 12-month period of time compounding, you're still making a lot of money. So, you know what? People that look at this and go, oh, that's terrible. You don't be greedy. I'm just going to tell you guys, do not be greedy. If you can make 2% a month, be happy with that and go with it. Now, you know what else, though? You need to work on improving it and always working at making your trading better and making yourself a better person and a better trader. But if you can do 2% a month, go for it. That's great. Congratulations. Don't think that that's a bad thing, okay? Because it's not. It's extremely good. And if you do 2% a month, you're going to be extremely wealthy over the long period of time. You're not going to hit your million in 6 years, but you're still going to get there. But still, so with the safe stop, you're looking at 2%. But you know what? I want to see if I can improve that a little bit. Okay, so this is with the aggressive stop, with you're getting 3 wins and 7 losses. Okay, that's a very, very doable winning percentage. Okay, this is doable, guys. 3 to 7. So the 3 wins is a 12% loss or profit. Okay, 7 losses is a 7% loss for a net profit of 5%. So think about that for a minute. You've just lost 50% more trades from 6 wins all the way down to 3. And you're still making 3% more per month. And if you're compounding that over the period that I showed you in that compounding chart, that's a lot of money just from using a tighter stop loss and going for a greater reward to risk ratio. So why do you always hear people saying go for your reward to risk ratio? Well, here's why. If you can hit, I don't know what that's, if you can hit 3 out of 10 with a 1 to 4, you're going to make 5% every single month. And I'm just going to tell you that this is doable. You guys can do this. No matter what type of market you're trading, whatever Forex stocks, uh, whatever it is, you can do this. Okay, so the point is this. Using tighter stop losses makes your wins much bigger and gives you a better shot at earning a net profit month to month. You can lose more trades and make more money, but we expect to win more than we lose, so let's look at that scenario. Okay, so now this is pulling it back out to the same winning percentage before. 10 trades with the aggressive stop. 6 wins equals a 24% gain. 4 losses is a 4% loss with a net profit of 20%. Now, this is interesting because you can see how powerful this this how powerful this is in the fact of making money and increasing your profit. If you can continue to do your tight stop losses and let your trades go to the 4 target, it's not that, I mean, it's not out of the realm of possibility. Why? Because we're assuming a 100 pip target, okay? This is not like a day trade where um, well, this is a day trade, but this is not like a long swing trade where you have to go 400 pips to hit your target. This is 100 pips. And if you look at the daily trading ranges on many of these pairs, the average ATR, it's much greater than 100 pips. You can find a 100 pip trade. They're out there. Okay, but if you time it right, you can have a tighter stop. It's based on timing, and you will see these greater profits. Now, you're not going to get quite as many trades. Actually, 10 trades might be a little on the high side for a month, but also 20% is an incredibly good month. I mean, that's a great month, but it's possible. So one of the purposes of this is to open up your mind to some different possibilities in your trading that you might not have been thinking about before. Okay, so that's how you increase gains, but there's one serious problem, and that's the market is designed to fight against winning. The market has a favorite trick called a shakeout that's designed to get you out of potential winning trades. Now, this is why tight stop losses traditionally do not work, and I'm sure you guys have experienced this. Let me ask you guys a question, okay? Has anyone um, ever got into a trade, went long, put a stop loss in, had the market take out your stop, and then go in the direction that you picked the trade? Has anybody ever had that happen to them before? Okay, great. Well, there's some people that have said never. Actually, I saw one person that said never, and that I got to find out. I'm going to go back through the chat and find out who that person is, and I got to meet them because it's awesome. That guy must be awesome. Uh, One guy says it's because they've rigged. Yeah, well, right. It's rigged. The market's designed to do that. Okay, so when you're trading, you got to look at things. You look at yourself, find out what your problems are in yourself, and then look at the market and find out what the problems are in the market. When you find those problems, then you're like, okay, now that I know what the problem is, now I got to find the solution. And I'm an optimist. I believe that there's solutions to everything. I believe that if we look at the problem, we put our minds to it, we make a plan and a strategy, we can find a solution. So there's the problem, just like our government right now has a lot of problems. I believe that if we had some thinking people in government, we could find some solutions. Or if we had some citizens that were willing to take a stand and to get involved and to do some things, I believe that we can find solutions. I don't think that it's the end of the world for our government. I think that there's hope, but we have to be looking at the problems and finding solutions. Enough of the side talk there. Back to the market. There's a problem in the market, and that is the shakeout. So let's talk about it. A shakeout's when the market moves in a way that is designed to take traders out of good trades and get traders into bad ones. In other words, a shakeout is the market's way of getting people out of potential profitable trades and inviting people to get into unprofitable trades. And the market is very good at this. It does it all the time. And just by the question that I asked all of you, you have all experienced this, and I've experienced it. We know what the market does, but let's not become victims of the market. Let's understand what it's doing. Can you join with me in this? Understand what the market is doing and take advantage of it, and don't let it beat you. Okay, shakeouts are the best friend. They happen all the time, and they typically look like this. Okay, so let me just explain what's happening here. So this candle is red, right? But at one time, some charts are blue, some are green. I'll just say green. At one time, this was a full green bar. Okay, and people were looking at this bar, and people were going long here because they're thinking it was going to break out, and then all of a sudden, boom, it shakes all those people out. Okay, or the other way, maybe this candle was red, okay, and then people are going short. I mean, there's a lot of different scenarios, a lot of ways this works, but let's say they're going short here, right? And then all of a sudden, the market just goes up, 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 up. All these people are getting stopped out, up, 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 up. Then now people start going along, and then all of a sudden, boom, right back down. We got a tail. It shook all this money out. All these traders, it did all that to get people out of their trades, take the money, and go to the other direction. And that's what the market is doing. We got to try to understand what the market is doing. So a tail bar is a shakeout because it shoots in one direction to knock people out of the trades they're in that are going in the right direction and gets people jumping on board as it rises, even though eventually going to reverse and crush people in that direction. You know, a lot of this is done with stop losses as well. A lot of people have stops. The market goes out and takes out your stops. A lot of this is done because of fear. People are afraid. They jump in at the wrong time because of fear. They're not being patient. They're not running their discipline, or they're being greedy. Those are the different market psychology that is typically going through somebody's mind: fear and greed, and then there's also the stops. So the market has a way. It's kind of a natural move of the market that it takes these out, and it's the perfect way to take people who are long and short at the same time, and it takes all the people out. It's just faking people out. The market's not going to move. The market's not going to ever have a significant move without a fake first. So if you're expecting for the euro yen to go 100 pips, like I saw in the comments, and it can do that in 30 minutes, if you're expecting that to happen, I'll tell you that it will happen, but it will not happen without shaking people out first. You're going to see a head fake to the downside, a head fake to the upside. You're going to see those things happen before the move. So guess what? As traders, we got to know that that's coming. So if we know that they're coming, do you think that we could possibly prevent it? Absolutely. Okay, this is a random pair on a random time frame, and you can see how many bars have fake outs in them. Again, this is because of the market's favorite trick. You can see these tails here. Just take a look at them. I know doesn't matter what time frame, they're on every time frame. The market is just shaking people out. Look, people were ready to go short on a breakout here, but guess what? Shake, shake, shake. People wanted to go long. Oh, the market's not ready. It's got to consolidate. It's got to whip. It's got to take people's money before it moves. Here it is again. Boom. I mean, it's everywhere. Okay, so it's a tail. Did I go the right way? No, I went the wrong way. Okay, so we love using our tight stop loss strategy to help us hit these bigger gains, but often the market shakes us out of a trail using a tail bar and then soars right to our target that would have made us a huge gain. We talked about this earlier, but I want to show you. Take a look. Okay, so here is a bullish engulfing candle. Okay, we would have had a little pin bar here, a bullish engulfing candle. We know that the market's ready to move, and take a look at it. Oh, our stop loss is right here. This is great, but you know what? It starts to move up, up, up. Everybody's jumping on. We're going. This thing is going to go, but nope, change the mind. Market decides to shake everybody out. Everybody's cleared, hit all the stops, and then boom, then it goes. Okay, so that is a real bummer when you have the best entry. You're like, I'm such a good trader. I knew that thing was going. You might be able to know where the market's going, but you're not a good trader unless you can get in without getting shaken out. That's the test of being a good trader or not. And you know what? The only way to do that is to sit in front of your charts and to watch those things, to learn the way the market moves, to understand what's happening, and then just be an observer and watch and watch and watch and learn and see what the market is doing. Okay, so we know what the market is doing. We understand why it's doing it. The only question is, how do we stop it? So the key thing that I've been trying to point home with this training is we got to get tighter stop losses to make more money. Okay, and the other thing is if we get these tight stop loss, we cannot let the market whip us out, because then we're going to have a 1 in 10 winning percentage and it's not going to work. So we got to stop these fake outs. Okay, so we've got to find out how to avoid the whipsaw. And this is one, I'm going to show you one example of a way that we do it. And so I showed you this trade right at the very beginning of an example of a trade we did. It was a breakout trade. There was an entry, and the price went down here. It was a breakout out of this triangle, and I'm going to zoom in now to a shorter time frame, because that's what we do. We identify the trend, identify where it's going, watch the market for the move, and then get into a shorter time frame and watch what the market is doing on that shorter time frame. So this is based on a 4-hour chart, and this stop here, like right up here, would have been 100 pips, which is where the stop loss would have been on that. But to get a better stop loss, we got to jump down to a lower time frame. Okay, so now it's at a 15-minute chart. So this line here represents the break of support. Okay, you can see there's a support level 1, 2. So here's the break. And one thing on a breakout, a lot of times the market is not just going to go, it's going to retest. So you watch for the test, and then you don't get back in until you see it go back up and retest the line. Okay, now one key thing to talk about this. Traders don't want to wait. Why? Because of fear and greed. Look, when you see this is me. When I would go here, I didn't want to take this trade, or didn't want to wait, because I was so afraid I'd miss it. I'd be like, oh man, I'm missing the trade. I'm missing the trade. I'm missing the trade. I got to go in. I'd get in. I'd be watching. I'm like, oh, that's it. I'm going. And I'd get in right here. And then, I might not get stopped out, but I'd still have to have a big high stop loss up here. It would be 50 pips or something, or 100 pips or whatever it may be. But now I don't care if I miss a trade, because if I miss it, that's okay. But because I want the trade to come to me, and I want to be patient. So if I miss one because it just takes off and I don't get in, that's okay. I'm always going to wait for a retest. So when I get a level to break, I'm going to wait for a retest, and then wait for a better price, wait for the price then to continue back down. And when you do that, here's my next stop loss. It's a much above this trend line here, right in here. It's 25 pips instead of the 100 pip stop. So what does that do? You're catching the market with momentum on a shorter time frame. It's a high probability setup, and you're able to hit the 4%, the 5%, 6% winners instead of a 1-to-1. That's how we do it. It's a great way to trade. There's still nothing wrong with the 1-to-1. Like I told you, I don't know if you guys were in the whole thing. If you're hitting a 1-to-1 and you can get 2% a month, that's great. Be happy. But I still think we should always be working to improve ourselves. Okay, so here's an example of another trade here. This was a same thing, a breakdown here, and this was an actual trade. It was 11%. It went back up right into the retest, and boom, right down there. Okay, it's 11% trade. That's a great winner. 11% is a great trade that you could take. It's a great trade. Okay, so that one trade that I showed you was 7, the other one was 11. Those are extremely good ones. But even if you're getting your 4%, 1 to 4, which was what I was showing you, that's going to increase your return. Now, in closing, I just wanted to go over some of the drawbacks here because everything has problems. This isn't perfect. You still got to work through it. One of the problems with using this strategy is the patience issue. You've got to be willing, just like I said, you can't jump in on that break. You've got to wait for it to come back to you. You've got to wait for it to come back, and then when it does, you wait for it to retest, and then you wait for it to go right back, and then you do it. You enter into the trade. That's just how it's got to develop. And so a reason you might want to not want to do that is patience. So if you're a guy that wants to get in front of the charts, 20 minutes a day and make a trade in the evening, this strategy probably is not for you, because this is going to take patience. The other problem is you got to be in front of your charts. With the market that we're trading, the Forex, it's open 24 hours a day. And so, I'd like to trade during the New York session. And so sometimes the strategy will hit during the London trading session, which is like 2 a.m. in my time. And so I wake up in the morning and I've been watching a trade. I'm like waiting for that thing to develop, and then I go to bed, and then I wake up in the morning and guess what? I missed it. And then I'm like, oh man, I missed my trade. And so I gotta wait for the next one. And that's painful. That's painful for me. But I've learned to do it. I've learned to be happy with my 2 or 3 trades a week. The market is going to give me some during my time that I'm trading, the time that I've set apart. That's why I come in like what I said at the beginning, with my preparation, with my prepared mindset. I start out with that preparation. I'm willing to only take the 2 or 3 trades that I get a week. I'm fine with that. Okay, so the other downside is less trades. You got to be in front of your charts, and you got less trades. Um, the bonus, guys, the bonus is a higher winning percentage. I'm telling you, I would take less trades every day if I knew that I was going to win more, if I was going to win a higher percentage, and not only a higher winning percentage, but a higher profit percentage. When you combine a higher winning percentage with a higher profit percentage, you're really looking good. Okay, this is an extremely good thing that I'm showing you. If you've never thought of trading like this before, just take a look at it. Just remember we talk about problems and solutions. Think about it. Okay, I want to win more trades. How do I do it? Well, one of them is to be patient. You want to get a bigger winning percentage? How do I do it? How do you get the bigger winning percentage? So that's a great bonus, is that you get that higher winning percentage, and also the higher returns. Based on the chart that I showed you earlier, you can get a 20% return with only 10 trades. A month. Now that's an extremely high. That's if you hit 6 out of 10 and you hit your 1 to 4, but that's only 100 pips. It's only 100 pips. So if you take the number of 6 winning trades at 100 pips each, that's 600 pips, and then you got to minus your 25 losing, times 4. So you would make a total of 600 pips in winning trades, and then you would lose 100 pips. So if you can hit 60%, you're going to make 500 pips in a month. And I'm telling you guys that you can definitely do 500 pips in a month. It's possible. You can do it, but you've got to be prepared. You've got to have discipline. Okay, so I guess Morgan's got my daily analysis. I've only got a few seconds. We do a free market analysis every day on our website. You can click the link and get access to it. If you enjoyed my presentation, you might like our analysis. It's extremely useful and helpful. So thank you.
All right, good deal. Thanks, Casey. We really appreciate you being here and your first time at the Trading Pub. We definitely appreciate your time. So, if you guys enjoyed that, Casey does a free video each day. Basically, you can get their analysis, no strings attached, but can click on that link right there, and I posted it up there. We did record the event. We'll get all of our recordings posted on our website. What we try to do for those of you, I know we've got some people that are just joining us throughout the day. What we try to do with each event is basically take it